Welcome back to the Stock Estate, everyone, where we learn how to swing trade with risk management. It has been a really red day last week for the markets, okay, especially from the latter half of the week. Okay, as I said, in my previous videos, okay, I actually released 2 videos on the overall markets as well as FOMO trading, which has been the last 2 videos I released. The first one being the tutorial about overall market pullback, as I kind of warned everyone, that there's an incoming market pullback coming very soon, and this kind of overall has an effect on all the swing trades as well. So if you wish to go check it out, okay, go to this video over here and go check it out yourself. Okay, these videos are, I would say, not as popular as my top 3 swing trade stock videos, but I still do think they are quite important for you guys who are beginning to learn how to swing trade to watch as well. So if you do like this kind of other kind of content, okay, do drop a like and do watch those content as well. Okay, so without further ado, right, today I'm just going to jump straight into the update about last week's picks and some valuable lessons that we can learn from them, as well as my next top 3 swing trade stocks for this coming week. Okay, without further ado, let's jump straight into it. Okay, first stock I'm going to talk about was our biggest winner from last week, which is CTXR. CTXR was a massive winner. You can see that, what kind of parabolic highs is this? Okay, so I actually called it out around, let's see, let me just draw out my doodle, right? Okay, I called it out at around here. Okay, in a sense, quite fortunate, right? Okay, I recall it around 1.34, $1.34. Okay, then when Monday opened, okay, it did give us a chance to get in. Okay, right at market open, it did not shoot immediately up to the sky at pre-market, so it did give us a very sufficient time to buy in. Okay, so from then on, it reached to the high of $2.10, and I think after market, actually it went even higher to around $2.20. Okay, so overall it was around 40% upside. Good swing trade itself. Okay, for those of you who caught it as well, and for those of you who actually manage your risk, good job on that. Okay, so one valuable lesson that we can learn from here, right, is that they actually pulled back around this area. Okay, so when you pull back into this area, right, okay, I hope people have actually took profits around this area as well, because you can see, right, it trades out of the Bollinger Band and it spec the parabolic high. So what I did, right, okay, I actually didn't get the full 40%. Okay, and it's actually, this is, you might be like, oh my god, you're stupid, man, why didn't you get the full like profits, right? But honestly, at that point of time, right, in hindsight, it's always 2020, right, I didn't know that there was going to be another huge pop over here, right here. Okay, I thought this area, right, was really pretty good as well already. So it was a good, I think, around 25-30% pop from there. So in a sense, I actually cut almost all my positions, right? I left just a few shares, right? When it went down to the downside, added a few shares and actually sold a few more here, but didn't really actually capture most of the move. Okay, but it was still a solid 20%, 30% swing trade for me. Okay, so but for those of you who manage your risk well, get the full 40%, 45%, good job to you. Okay, and remember, okay, always manage the risk. All right, so next stock itself, CRSP. Okay, CRSP was Crsr Therapeutics, which is a company which I called out last week. I was very in a sense, I was bullish very fundamentally on this company. I can see that this company for the next 10 years or so definitely will 2x, okay, from where it is now, okay, because the fundamental business, the industry, the total addressable market is such a huge area to tap into. But okay, I did say in last week's video, if you want to swing trade this company, right, okay, you can see from my last week's annotation right here, this is actually annotated last week. Okay, I didn't touch this. Okay, so if you want to go fact check me, right, you can go back to my last video and go fact check me. Okay, so I said that we do not want to buy into this, right, until it closed firmly above this area. Okay, I drew this kind of like an arrow thingy over here, right, which means, right, I was asking people, to say that if we close highly above this area, then we are up for a nice little we can actually take a position around here for its further upside. But you can see, right, it didn't. Okay, it didn't. Okay, so you can see this is a very clear indicator that sometimes the market, right, just doesn't you cannot predict the moves because we don't have a crystal ball. Okay, we don't understand and we cannot predict where exactly will happen. So we only can react. Okay, we need to find our trigger. Okay, so you can see, right, for my stock state trading, right, most of you got the area of value down. Most of you got LA down. Okay, but a lot of you, okay, which is me from the start last time long ago, right? Okay, I always forget the T as well, which is the trigger to enter. Okay, we need a trigger, something to tell us that it's time to enter. Okay, instead of FOMOing and jumping into this. So if you're FOMOing a lot, go and watch this FOMO video. Okay, very important. Okay, to help you counter this kind of FOMO trade. So for those of you who didn't wait for the confirmation or the full candle to close above this 50 moving average, right? You just bought a position here. Okay, you have taken a loss around 4%. 4%-ish for the entire week, okay, which is also dragged down by the overall markets as well because everything was basically in the red, right? So yes, again, if you didn't wait for the entry trigger and you FOMO into this trade, right? No worries, okay? Learn from a mistake, okay? In any case, right, at this area over here, I can see strong resistance at this area, strong support at this area. So let me just bring up my doodle, right? Okay, anyways, if you already bought in at the wrong mistake, right? Okay, I can see that if I was in your position, okay, I'll actually hold it for a little bit, okay, and because at this area I can see strong support, okay, and for it to bounce to the further upside again, okay, but up to you. If you feel that there's a better opportunity, you can cut this trade and go to another opportunity, okay. It's up to your risk management as well as your own decision making. Okay, next stock, okay, CLVS. Okay, CLVS was quite a similar situation to CRSP. Okay, again, CLVS was an oncology company. CLVS, this last week's annotation as well. I said that, you know, if I zoom in a little bit, right? Okay, look at my real ugly, funny looking candle, right? Green candle. So this candle, right? I was like saying, okay, it needs to close strongly, okay, for overreaction play, right? A strong reversal down here and a green candle right here, right? For it to count as a buy entry. Okay, to buy right here. You can see this candle over here. But what happened? Okay, overall market conditions as well as people are actually taking a lot of profits on this company, dumping fear and dumping this stock, right? Actually, it broke below this level. It did not validate this 20 moving average over here. So you see this 20 moving average, right, needs to be validated. That means people need to understand that this, or people need to feel that this is significant enough for them to buy in. But in this case, nobody did. Okay, so we as swing traders, okay, we need to react. So okay, we see that, oh, it dumped, right? So where's the next area that we can look to do an overreaction play? Okay, 3 seconds. 3, 2, 1. Okay, so if you don't know yet, right? Oops. Okay, so where you can do is actually at the 50 moving average. Okay, so next area to do, right? Okay, 50 moving average, okay, for next few days, we'll actually extend out all the way here. Okay, extend out all the way here, right? So if it manages to bounce, so let me repeat myself again, okay? So again, all these, you need a trigger to enter, okay? If you only watch half my videos, right, then you just blindly jump into it, right? Then please don't do that, okay? Please don't do that, okay? Please understand the entire workings of the entire swing trade itself, okay? So let me give you an example again. So right now, if it touches down one more time over here, right? Okay, over here. Okay, what it needs to do is, if it breaks below this level, it needs to close one candle, right, or green candle solidly above this 50 moving average. Then you can set a buy order here to swing to the further upside. If not, okay, if it breaks below next level, right, the next one is going to validate is the 100 moving average already. Okay, then that's another play for itself. So again, if you want to play CLVS, I think still quite possible, but you have to watch the price movement for the next few days or market open. Okay, so that's it for, you know, the lessons learned from last week's picks as well as the gains and losses. So, you know, you have a better understanding of what really happened. Okay, so that's it for the update on our previous picks. Now, let's jump into the most exciting part of today's top 3 swing trade stock video. So I'll probably be releasing 2 kinds of videos every week from now on, because I think you guys really like this kind of play. So one kind of play will be the safer plays or the bigger cap companies that, okay, for the beginner swing traders, right, this is easier for you guys because they won't fluctuate as much, not as volatile, easier swings, very liquid, very volatile, okay, not very volatile, very liquid and not as volatile, okay, so that you are able to, you know, time your entries and everything a little bit easier. So, and these companies are most of the time I pick, right, the safer companies are the ones that have very good strong fundamentals, have a base business. It's not just a random company, right? That you're just playing it purely on technicals. These are, in a sense, have good fundamentals, have good businesses, okay? I won't say awesome businesses, but they have a bit underlying business under there. And I'll actually make another video, right, for those more advanced swing traders that regarding around those smaller cap companies, which are more risky, okay, but brings greater reward as well. But those I only recommend for those who are already in swing trading for quite a bit of time, okay, watch my videos for very long, okay, know how to manage risk very well, okay, if not, you'll get burnt very badly. All right, so let's jump into this week's safer plays, the top 3 swing trade stocks for this week. Okay, the first one is actually called MRVL. Okay, MRVL stock. Okay, MRVL stock is here, Marvell Technology Group Limited. Okay, and what is MRVL? Okay, MRVL is a company that designs, develops, sells mixed signal, digital signal processing, embedded and standalone integrated circuits. Okay, so basically they are they sell controllers, they do network adapters, physical transceivers. Okay, so they're actually a company, right? They're a semiconductor company. Okay, you can look at those, right? Because so the sector is technology, industry is semiconductors. Okay, so this is basically what this company is about. Okay, so remember I said that these companies, most of the time they have good business. Okay, they do have some basic business that's coming over here. Okay, they can see that most analysts price rating, right, the average is around 53. The current price is around $51, $52. So right around there. And you can see that from the news ago, right, as the Marvel Storage Solutions powers Toshiba's 18 terabyte cloud scale capacity HDD. So you can see that there's, this company has things going on for them. Fundamental news, there is. Okay, but as swing traders, again, we want to look at the price action. So price action wise, let's jump straight into it. So the price action, you take a first look right at this, right? What can you see? Okay, for my old subscribers, this is like the test for you guys. Okay, to take a look. Okay, so this is probably a trending play because you can see very easy. Okay, even looks a bit like the S&P 500, right? Okay, so it touches one time. Okay, it respects the 50 moving average pretty closely. Okay, so it touches once, touches twice, touches thrice. Okay, you can see. Let me just draw it out for you, right? Okay, it touches once. Okay, let me just bring it down here. Okay, you can see, right? It touches once, twice, thrice. Okay, here it didn't touch. Okay, now it touches it again. Okay, so this is a company that has solid fundamentals. They have growth in their sales as well. So how do we gonna play this? Okay, how are we playing this? Okay, so right now, right, it is at this level. It's at this level, right? Okay, what we can do right now? Okay, we can wait for a small little pullback. Okay, to enter. Because where's the area of value now? Okay, so right now it is trending upwards, right? The area of value is around here. So let me undo this. Okay, there's a nice little support line over here. Okay, and hence, okay, if it dips down to the area of value around here, right, which is also near the what? Near the what? You can see this is what? This is the, let me see, this is actually the extension of the 50 moving average. So anywhere around here, right, around $49, $50, okay, it will actually be a trigger to buy, okay, trigger to enter this trade itself. Okay, stop loss, okay, can be 1 ATR above, below this level over here. And anywhere that invalidates this trading setup itself. So your entire, so if it breaks below this, right, most of the time you can see that it breaks this support. Okay, most of the time it will invalidate your trading setup. So if you manage to get in this area, okay, the entire, okay, you can actually sell at the highs over here. So stop loss over here, highs over here. This is a $4 trade, right? Okay, to a, let's see, $4 reward to a roughly around $1. Okay, $1 risk. So it's what? 4-to-1 risk to reward ratio. Okay, so and also this company, right, very, very solid. Again, there's a base business behind it. So again, this is in a sense a very safer play for the beginners to play. So this is a good company itself to play. It's not bad. Okay, so 4-to-1 risk to reward ratio. Pretty bullish factors ahead. Okay, next I'm going to talk about is actually Crsr Technologies. Okay, which is MAXR. Okay, Maxar Technologies. It is a company that is in the space industry. Okay, if you can look at it here, right? Space industry. They provide Earth intelligence and space infrastructure solutions in the United States, Asia, South America, Europe, blah 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 blah. Okay, so satellite company. Okay, satellite space stuff. Okay, and you can see that this sector is also actually very, very hot. Okay, they see like SpaceX. Okay, and a lot of companies right now like Virgin Galactic, all the space stuff, right? A lot of people are hyped into it. So even better if you can play companies that are in the hype zone, right? For long-term play, right? Not shorting the company, right? Even better things for us. Okay, so we can see that analyst price target for this company, right? Okay, is average is also 11 price target is 60. Okay, right now it's 47. Okay, again, a lot of people think it's very majorly undervalued. Okay, that means they have actually a good, strong underlying business under this. Okay, so let's take a look at its charts itself. Okay, charts itself, this is actually a wedge play. It's a wedge play. Okay, a wedge play itself. Okay, wedge play is right. Pretty delicious as I said. Okay, now this is in the 1 hour time frame, and I'll show you why I look at the 1 hour time frame later. But let me go back to the normal, which is the 1 day time frame. Okay, 1 day time frame, interval of 1 day. Okay, so you see, right now it's in a nice little wedge pattern over here. Okay, it has been going on an uptrend. Now it's started to consolidate one more time, right? Okay, there's been a very strong uptrend since then, but right now it's been consolidating. So let me draw the wedge over here. One. Okay, roughly around here. So you see, this is a wedge play, but you can see, right, that right now it's in the center, right at the center, right? So we can either wait for it to have a pullback, or if we get in here, right, the risk to reward is roughly what? 1:1. Not very nice, right? Because if you can take a look at this, right, So how do you break down this? Okay, so if you buy it around here, right? See, this is equal length, right? 1-to-1 risk to reward ratio. Not really ideal. So what can we do? We can actually go to the 1 hour time frame, okay, to get a better understanding of what's going on. Okay, so we can have what? More information. Okay, because what's the difference between 1 day and 1 hour time frame? 1 day time frame, that means 1 day it paints 1 candle. 1 hour means 1 hour it paints 1 candle. So when you shorten it down, right? So a 1 day candle has 24 1 hour candles, if that makes sense to you. Okay, so internalize it a little bit if you need to. But right now you can see that we have much more information to work with. Okay, so you can see that, right? Right now it's going down. Okay, then it spiked up massively after touching the bottom here. One time spiked up massively, and now sellers, right, are selling this company again, because probably some of the people who are bought in here, they are the back holders. They're actually trying to sell a little bit off, and it's actually forming a really nice wedge again. So if you want to adjust it a little bit more, right, we can. Okay, we can adjust this to be a little bit more accurate. Okay, so it's a little bit more accurate now. Okay, again, right now, right, you can see that it's in a small little downtrend. Again, what we need to do. So where is the area of value? Where is the area of value? Anyone? Okay, so area value will be around what? This wedge line over here. This wedge line over here. So it's around the doodle, right? It's around here. Okay, we wait for the market to come to us. Okay, wait for it to touch down the bottom over here, so you have a better risk to reward ratio, quite similar to MRVL. Okay, and if you get it already, you can actually sell this swing over here, take profits up over here, or you can actually wait for it to consolidate a little bit more before breaking out. Okay, so this actually can be a breakout play because it's already consolidating, it's squeezing very, very tight already. Okay, let me just even clear all the drawings, right? Okay, just let me see, right? So you see the wedge over here. Okay, it's already tightening quite a little bit. Okay, looking at the next few days price movement, right? If everything goes well, okay, it might have a breakout actually. Okay, so that's it for MAXR. Okay, last stock that I'm going to talk about, right, is actually EXEL. Okay, this company, right, I actually really like this chart, and actually this company, this company's charting, because this company has one of the nicer technical charts. But again, right, okay, I might think it's nice, right, but the market might not think it's nice. So in the end, right, other companies like Maxar, MRVL might actually be the winners instead. You never know. Okay, so again, this is just my opinion. Okay, my opinion, this is actually a very nice chart. Okay, so let's take a look at what this company is, right? It is Xililis, okay, EXEL, okay, there's a lot of E and X's, okay. Okay, you can see, right, very volatile, this company, okay, but it is a oncology-focused biotechnology company, okay. Again, it's a biotech company, okay. Biotech companies are biotech companies, okay. So a lot of the plays I had is actually biotech companies. They are companies which are, testing a lot of trials, okay, FDA approvals. A lot of things can actually fluctuate the price movement itself. That's why these companies are actually quite a little bit, I would say a little bit more riskier, because fundamental news can always trump the technical analysis. Okay, so, but however, right, you can see that analyst price target, 12 of them, right, average around $31. Okay, currently now it's around $22.21, way below even the lowest one, which is $26. Okay, so right now it's, in a sense, in the analyst point of view, right, it's severely undervalued. Okay, and you can see that 9 days ago, right, Excel's Q4 earnings surpassed estimates. Okay, so they actually have a very, very good base business that is currently in place to support this technical analysis that I'm about to do. And also they have phase 1 results from clinical trials, yada 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 yada. Okay, they have also a lot of good news ahead, like clinically significant benefit versus Pfizer's Sutent, a type of kidney cancer. So you can see very, very bullish fundamental factors again for this company. But again, as swing traders, we want to look at what? The technical analysis. So technical analysis, right now, the previous few trades, we had to wait for the market to come to us a little bit more, because we had a better risk to reward ratio, right? But right now, this company, right, has actually already come to us. Okay, it has already come to us. Okay, again, let me just draw out, right? This is the one day chart. Okay, 1 day chart over here. Just let me draw out for you. Okay, this is, let me draw out the wedge. Okay, this wedge. Okay, so wedges, right? How to draw wedges? Okay, so you want to touch as many touch points as possible. Okay, possible. Okay, around here. Okay, this is an anomaly which actually spiked out of the wedge place itself and actually reversed back quickly. So you can see, right, this company is actually wedging forming a very, very nice wedge. Okay, a very, 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 very nice wedge ahead in this area. Okay, and if you want to zoom out and look at the higher time frame, right? Okay, again, this has been forming in a sense a range, right, or a wedge for a very, very, very long time already. So again, the longer the range, the longer the wedge, the higher the amount the breakout power could be. So, and let's look at the area of value. Okay, we look at the long-term trend. Now it's in the wedge. Right now, look at the area of value. What's the area of value? Okay, area of value. Area of value is where? Okay, let me just remove all the drawings. You will roughly know where the wedge is already. Okay, area of value right now, right, is at the, you see all the moving averages is actually converging. Okay, so when everything is converging, right, actually this shows that, this company might actually have a chance to, break out very strongly up to the upside itself. Okay, you can see, let me just pull it out, right. Okay, this is called the MACD. Okay, MACD, right. Okay, so you see that the market, right, moves from a high volatile stage to a low volatile stage. Okay, it's always in a volatile to non-volatile, volatile to non-volatile. It always contract, expand. It's just the way it is. Okay, so right now, right, after a big stage of contraction, right, now it's in a very, very slow and small volatility environment, which means that, a big move is coming soon. Okay, most of the time. Okay, most of the time, that means it signifies that a big move is coming soon. Again, so this is a breakout play itself. Because if you play a swing, right, a small little swing over here, right, not much profits to be made. So this is actually a breakout play, which I don't mind holding for, up to 2 weeks, 3 weeks for it to play out. Okay, and right now, right, the area of value is around here. Okay, area of value is around here. Okay, very, very strong area of value around here. Okay, actually, I can start to add my positions already. Okay, if it goes down further right into this area, right, I'll add my positions, add massively, because I can foresee, like a huge breakout about to come very, very soon in the next couple of weeks. Okay, and you can see, right, that in this area, why there's another factor that I'm thinking that is so bullish on this company as well. Okay, because it is a nice little support resistance level over here. Let me bring the MACD down again. Okay, you can see, right, at this area, right, oof. Okay, let me just adjust it down a little bit more. Okay, at this area, there's so many candles, right? This area has so many candles, right? There is, giving a strong little support, right, for this area to bounce off. Okay, so I can see this area at $21, right, at a very, very strong support level, right? That the price, would bounce off this level. So again, this is another factor that, you can take a look at this as well, because many people will actually look this as a significant level as to buy into this company so that they can actually set their stop losses and everything in place. So stop losses, right? People will set their stop losses everywhere. Okay, let's see. The stop losses here. Okay, as I said, the wedge play, right? The longer it plays out, more stop losses are in place. Okay, so when it breaks up one side or the other side, right? Okay, massive potential, massive squeeze upwards or downwards. So again, you must always have your stop losses in place and exit strategy. Okay, stop loss you can put, okay, here can be the previous swing low, okay, or if you are using the ATR method, right, which is the average true range, right, it will probably be around here, right under the 50 moving average over here, okay, or actually I would say safer bet, right, a safer place so they won't get stopped out so fast, right, is to wait for the market to come to you at this area over here, and you can actually set a stop loss outside the Bollinger Band over here, below the previous swing low around at $18-ish would be a good place to set a stop loss, okay, and yeah, okay, so that's it for today's video, guys. Okay, so these are the top 3 swing trade stocks, okay, the safer ones for this coming week of, Fed, okay, and do remember, right, okay, as I said, as you swing trade more and more and more, you will get better and better and better, because you learn how to control your emotions, as well as, always be reminded of the LATE format, late format, okay, so every single one of these criteria must be fulfilled, right, before you enter a trade, because if you don't do that, you are setting yourself up for failure, because if you you fail to plan, you plan to fail. Okay, so exit strategy, everyone. Okay, don't forget. Okay, you can have the best. Find long-term trend, area of value, then you enter the trade, right? But if you don't craft exit strategy, right, don't put your stop loss. You're lazy to put your stop loss because you think the market will only go one way, right? Then you set yourself up for massive losses. Okay, and then it's not really an ideal situation you want to be. Okay, set your area that you want to take your profit. Set your area that you want to take your get stopped out, because you don't want to get massive losses, and so that you can exit, right, with a clear hit, rather than when you're like, oh my god, I'm seeing so much red, right, then you exit, and that's most of the time is probably the worst time that you can actually exit out of a trade. Okay, and I hope you guys enjoyed today's video. Okay, smash the thumbs up button for all this information and research that I did for the entire day Oh, okay, it's pretty tiring. Okay, this is a very long video, and a lot of research has been done into this to find the best place that I have. Okay, because there's a lot of other plays, right, that are not as ideal because either they have low liquidity, they have very low float, which is very easily manipulated by the market makers, or a lot of other factors. So these are the ones that I actually feel that are the best prime movers for the coming week. Okay, so as I said, I may not be the best at I would say getting the best 50%, 60% stocks, right? But for me, it's all about risk management. And I shall see you in the next video. Stock and stay out.